Hello there, welcome to this edition of Africa, of Global Business Africa. From the Kenyan capital, Nairobi, over the next 30 minutes, we've got a smorgasbord of business content from all across Africa. Cairo, Johannesburg, Nairobi and Lagos, they all covered right here. Here's what's coming up. Up to 50 African leaders in the US for the Africa-US Summit. We'll be looking at what you should expect. What exactly is the future of the African Growth and Opportunity Act, better known as AGOA? And we'll also be telling you the story of an entrepreneur whose venture into offering a free newspaper in Kenya is paying off. On the 4th of August, the US is expected to announce nearly $1 billion in business deals to increase funding for peacekeeping and to commit billions of dollars to expanding food and power programs at the US-Africa Leaders Summit, which is currently underway in Washington, D.C. American officials who spoke before the summit, which brings together nearly 50 African leaders, said the US would showcase its interest in the fast-growing region through a series of government and public-private partnership deals to boost trade and investment. The administrator for the U.S. Agency for International Development, Rajiv Shah, told Reuters that there would be announcements on agriculture, food, power, energy, including new support for the Power Africa program. That's the privately funded program launched by President Obama in 2013. Now, the leaders from nearly 50 African nations, as I mentioned earlier, are in Washington, D.C. for the first ever U.S.-Africa Leaders Summit. This event aims to turn a corner, if you will, for U.S. engagement with Africa, even as other economic powerhouses like China, India and the EU increase their trade volumes with African economies. Here's CCTV's Jessica Stone with more.
For many Americans, Africa is a continent far away, full of images like these: poverty, hunger, political refugees, and a need for foreign aid. But former U.S. diplomat to Africa Todd Moss warns those are the pictures of the past.
The United States now has greater national security interests in Africa than ever before, and there are greater economic opportunities in Africa for American investors than ever before.
The U.S. has more competition than ever. Nations from Turkey to Malaysia, India to China are investing at a rapid pace in infrastructure, schools, and banking. Aubrey Ruby spent 8 years trying to help American companies invest in Africa.
Unfortunately, there's been a lack of interest for the last 10 years from American companies, except for the major ones who have done business there for some time, like Coca-Cola.
The Africans turn to the West for their security issues more than turning to China. That differs from when it comes to economics.
Because increasingly they're turning to China for their economics.
Yes, increasingly they are. You know, and it's also because there is more energy on the Chinese side.
Top U.S. officials want the first U.S.-Africa Leader Summit to change that dynamic.
We're all working flat out to make this summit a great success.
But U.S. President Barack Obama won't be meeting one-on-one with any African leader, in contrast to what leaders from China and other nations have offered.
We do risk them lowering the U.S. in their eyes as a partner, but from my experience, that is not anything new.
Moss says American companies also lack the support that other businesses get from their host governments.
Just to give you an example, the Chinese Export-Import Bank is many, many times larger than the U.S. Export-Import Bank. And so that can, in certain circumstances, put U.S. companies at a disadvantage.
The U.S. is focused on building on a program announced by President Barack Obama last summer to attract private investment to power generation in sub-Saharan Africa. And a whole day of the upcoming summit will be dedicated to business development, at a time when the African middle class is becoming a key consumer market.
We're seeing this once-in-a-lifetime transition of people that are buying their first television, the first refrigerator, the first car in the family. And that explosion in income and in demand is going to create a tremendous amount of opportunity in consumer goods, in energy, and in services.
Jessica Stone, CCTV, Washington.
Let's bring you up to speed with the latest developments from Washington, where Daniel Rangers joins us now. He's going to be covering the US-Africa summit between now and the 6th of August when it comes to a close. Daniel, should we expect any concrete outcomes from this conference, or is this just another one of those high-level talking shops?
Well, the head of the USAID, Rajiv Shah, has indicated, as you did, that there are likely to be something in the region of almost $1 billion of business deals announced at tomorrow's business summits, business section of this whole Africa Leaders Summit. There are some major CEOs turning up, both from the African side and the US side. GE, for example, major interest in developing African electricity through this Power Africa program, which sort of empowers US businesses to go in. That's going to be one element. A major beverage company, we're not told the name, is apparently investing much more in agriculture. So I think the major picture here is that where there are opportunities for America to sort of seize the development mantle and do something for the long term in terms of the development of African economies, so the US government is willing to provide some more support. But this is not an aid summit. This is much more about trying to get US companies into the trade agenda, as Jessica Stone's report was very eloquently laying out there. So when there are win-win situations, I think that's where the US is starting to grasp the nettle and get much more involved in doing these deals. And you can see the level of business leaders coming to this summit indicates that there's a lot of seriousness about that here.
Indeed, Daniel. The fact of the matter is, however, that the bulk of US-Africa trade is made up of US crude imports from Nigeria and a couple of other countries, but that has been in decline over a while. Is it possible that in the medium term, the US will not need to import any oil at all from Africa, given that domestic output of oil and shale gas has been rising?
Right, so there are different types of crude oil, as you well know, and the Americans have found it very useful to have light, sweet crude from Africa to their refineries here in the United States. But we've had this fracking boom where they crack the rock and get oil and gas out of that. That has meant that much of this light, sweet crude oil is able to be sourced here from the United States, and that's led to a rapid decline in the demand. But that demand is also being met by Europe and by Asia. So I think you'll see that gradual pattern continue. But the American refiners say you should not rule out the possibility that they buy again from Africa and increase that if the economics become better. In other words, if they see a cheaper product, they will buy it.
Indeed. At this point in time, I'd like to rope in Kelly Lemon. She's live in London. She's also been following, keeping tabs on the US-Africa summit from that end of the world. Kelly, GE CEO, Mr. Jeff Immelt, made a fairly interesting comment earlier today. He argued that closing the Export-Import Bank in the US would essentially dent trade ties, not just between the United States and Africa, but pretty much the United States and the rest of the world. What exactly is the gist of his argument behind that?
Well, the biggest concern for the likes of GE is when it's competing for contracts in the region, it's up against the likes of China and Germany, and without the Export-Import Bank's backing, it could lose out on the contracts. GE has been clear that African growth is a big part of its strategy, and according to the Financial Times interview, GE's African business is doubling every 4 to 5 years and is top of the line in terms of regional growth rates. Without the backing of the Export-Import Bank, those numbers could fall significantly and undermine current investment plans, and that's really the concern.
Indeed, but Kelly, the fact is, the US exported roughly $24 billion worth of goods to Africa in 2013. Is that trade flow still viable without the Export-Import Bank, assuming that Congress does actually kill it off?
Well, that's the concern, that it can't be sustained. In an interview with The Economist, President Obama says he's not sure why the Republican stance has changed on this issue, but he's concerned that it will hurt US companies and it will be like cutting off your nose to spite your face, as there will be German, Chinese and Indian companies who will be rushing to fill the void. Let's not forget, we're talking about a continent with 6 of the 10 fastest growing economies. President Obama says the business community understands that, but the politics is struggling to keep up.
Indeed. We'll have to leave it there. Unfortunately, we're running out of time on this, but thank you very much for your input. That's Kelly Lemon in London and, of course, Daniel Rangers as well, live in Washington, D.C. Both of them will be keeping tabs on the US-Africa summit over the next 2 days. Now, earlier on Monday, the US Secretary of State John Kerry called on African leaders to rein in corruption in order for their economies to grow and lift their millions of citizens out of poverty. He made those comments when meeting African financial officials in Washington on the African Growth and Opportunity Act ahead of the meeting of African heads of state.
But fighting corruption lifts more than a country's balance sheet. Transparency and accountability attract greater investment. Transparency and accountability create a more competitive marketplace, one where ideas and products are judged by the market and by their merits, and not by a backroom deal or a bribe. The market always works better with transparency, with the sunshine of accountability. That is an environment where innovators and entrepreneurs can flourish, and I guarantee you it is an environment where capital makes a decision to move according to its sense of security and its sense of risk.
Flying the flag there for free trade. Let's find out if AGOA really has any meaning and any impact, especially given the fact that it needs to be renewed or not next year. Michael Carr is a visiting researcher at the South African Institute of International Affairs. Is live right now in Johannesburg. Mr. Carr, thank you for your time this evening. Given that it is Africa's second largest economy, why does South Africa want to retain AGOA access to the US? Is there really a business case for it retaining duty-free access?
It definitely is. I think if you look at it, the relationship between South Africa and the United States is really driven by AGOA. If you look at the numbers in 2013, there was $15 billion worth of trade between the two. And of that $15 billion, $1 billion of that was a trade surplus to South Africa. Now, if you look at the whole period of AGOA, South Africa has had a trade surplus of nearly $30 billion. Now, what does that mean? It means jobs in the end, and jobs in manufacturing, high-end manufacturing. If you look at it, South Africa exports 60,000 vehicles to the United States per year, and AGOA is estimated to directly affect 62,000 jobs. So the non-renewal of AGOA would have a large negative impact for South Africa as far as manufacturing sector and future manufacturing growth.
Indeed. Let's focus on something else, however, that defines the US-Africa trade relationship. Domestic oil production in the US has been going up, and trade volumes with Africa between the US have been declining since 2011. Now, as we see more oil production in the US and a lot less of African crude being bought by the Americans, how will that fundamental shift reorganize US-Africa trade in your view?
I don't think it's going to fundamentally impact the US-Africa trade. I think currently the numbers stand correct. If you look at it, about 68% of what the African countries under AGOA export to the United States is in minerals and oil. But I think that the idea behind the U.S. Leaders Summit is really to try to build an infrastructure that can support manufacturing exports to the United States. I think that even if the United States is not importing the oil from Africa, I think that Africa will also find other markets in the EU or Japan, and definitely in China. So I don't think that oil exports is something that necessarily defines the relationship between South Africa or Africa in general and the United States, and hopefully not in the future if AGOA gets renewed.
Indeed. Final question for you, Mr. Carr. In April, the U.S. announced plans to expand its trade presence in Africa. The idea here to be doubling the Department of Commerce representatives across the continent. Beyond that and renewing AGOA, what else can the U.S. do to ramp up trade volumes in sub-Saharan Africa?
I think definitely increasing productivity services. So what we're looking at with the various initiatives that they have in the U.S. Leaders Summit, for instance, Power Africa, is really looking at how do we build up the infrastructure in Africa in general. So Power Africa under the African Development Bank is looking to leverage $7 billion from the private sector, or has pledged last year, and $3 billion over the next 5 years from the African Development Bank through the African Development Fund. I think that infrastructure is one of the key bottlenecks to the economy in Africa, and I think unleashing that will help not only intra-Africa trade, which will help exports to the United States, but enhance the relationship and investment in both. I think a further thing to look at is technical assistance. I think if you look at it, many companies simply don't know how to export to other markets. And I think if you help companies to navigate how they export into different markets, I think that's going to increase the amount of trade that goes between these two economies.
Indeed. We'll have to leave it there on that note with trade facilitation. Mr. Michael Carr, visiting researcher at the South African Institute of International Affairs in Johannesburg. Thank you very much for your time this evening. Quick run through the markets here for you. Some interesting numbers coming out of the equity market. South Africa, of course, snapping back from a three-day losing streak in trading today. It posted one of the first gains in about 3 trading sessions or so. Implants, of course, leading gains in the top 40 shares. Nedbank is releasing its results tomorrow. Its shares are up 2.37% in trading today. When we come back, we'll be looking at what small businesses can do to live beyond their crucial 3rd birthday. All that and more is coming up next. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
Zambia is a hidden gem, soon to make its shining debut on the global tourist circuit. It successfully hosted the UN World Tourism General Assembly in 2013 and is expecting the exposure to shoot their previously slow-growing tourist earning numbers far beyond the 2010 mark of $148 million.
17 minutes into the program, you're watching Global Business Africa. Now, if South Africa is to kickstart its GDP growth, which is, let's be honest, fairly anemic right now, and lower its unemployment rate from the current levels of well over 25%, small and medium-sized enterprises are a key part of the solution. Now, even the country's economic blueprint, the National Development Plan, acknowledges this. But if 7 out of every 10 SMEs fail, how can SMEs really be a part of the solution? CCTV Sumita Naidu sought some answers from the Managing Director of Rocket Seed. On What's Hot Tonight, their conversation starts by identifying the challenges entrepreneurs face.
Tess Solomon defied the odds, going from a school misfit, which led to her expulsion, to the Managing Director of an Information and Communications Technology, or ICT, company. Growing up on the wrong side of the tracks in Johannesburg, she had little motivation to dream.
Tess Solomon grew up here in Fordsburg, a predominantly Muslim area. Apart from struggling financially, Tess also had to deal with a religious, conservative society that often frowned upon her behavior.
The messages that I got through the overall society didn't really leave me feeling that I could actually amount to much. But I always wanted to make it and to be somebody.
Solomon became rebellious.
I was involved with naughty kids, did naughty things, didn't really have much prospects, for a successful life. And that changed really when I was about 14, when I got kicked out of school. And the only option available to me was to go to Damnon College, which was filled with either rich kids or delinquents.
But she finished her courses and found a job as a secretary. She then ventured into property. After building up some confidence, Solomon started her own real estate company before finding her real passion in the tech sector.
I had absolutely no help. I had a support base, in terms of friends and family, but certainly not a significant investment in my business or assistance.
She now runs the South African operations of a global email media company called Rocket Seed. The ICT business custom makes email banners for corporations and other businesses.
We turn the everyday email that leaves an organization into a marketing, PR, customer service and retention tool. So email media is like billboards in regular mail.
Suleiman says it has been difficult being a female entrepreneur. She admits that at times she felt intimidated in a male-dominated industry and had to learn how to stand her ground.
Whilst there are a number of women in all businesses in South Africa, certainly at the most senior levels, in ICT specifically, there's a great shortage. So I go to various industry dinners from time to time, and really, you know, there are a handful of women at best. And I found in my career that as a woman, you actually need to work a lot harder than your male counterparts to be taken as seriously.
The South African government is trying to encourage more young people to become entrepreneurs. However, many believe the environment is not conducive for new entrants. Youth unemployment in the country currently stands at 36%.
One of the biggest problems facing entrepreneurs here in this country is a lack of support and funding. So not only do we not have mentorship, but anybody who's ever tried to start a business will tell you that banks only give you money when you don't need it. So there's very little support and incentive for people to go out there on their own and start up their own companies.
Suleiman wants to now spend her time focusing on young people and addressing the skills shortage in the ICT industry in South Africa. Sumitra Nadu, CCTV, Johannesburg.
Quick run through the commodity prices here now for you. We've been keeping tabs on cocoa price movements. They did smack into a 3-year high sometime in July. It should be of interest to you, however, if you're in the cocoa market, to note that there was a rise in cocoa arrivals at the port in Cote d'Ivoire, one of the key producers of this commodity, up 22.9% to about 1.7 million tonnes in the production season from October all the way to August. Some fairly interesting data with regard to the lovely thing that we call chocolate. When we come back, we'll be featuring an entrepreneur whose venture into offering a free newspaper in Kenya seems to have paid off quite well.
BizAsia. Asia means business.
Welcome back to the program. You're watching Global Business Africa. Now, X News is Kenya's first ever free daily newspaper. It's set off something of a trend, however, but its entry in the first place is backing quite a few African media trends, especially given the surge in circulation. In Grassroots tonight, we feature this new evening newspaper in the Kenyan capital that has emerged as the third largest paper in Kenya within just 3 months of its launch.
X News is a free afternoon newspaper for Nairobi. Free newspapers are well established the world over. From New York to London, Paris, my hometown of Melbourne, Hong Kong, free newspapers are changing the way that print media works. And they're well established. So the idea was simply to do something that's that successful and quite well done elsewhere and introduce it into the Nairobi market. Because the Nairobi market has a very profitable newspaper industry, but it's not very vibrant. So we thought that we'd introduce what's a well-proven product into a marketplace that looks like it needs something new. What do you think of these photos of winning captions and stuff? Some of those. It's very current, it's very precise, and it covers issues that are relevant to young professional Nairobians. So it doesn't dwell on politics, which the others do, but it's a daily edition of news that's relevant to today. And very accessible. So short, sharp news, ready to go. people generally pick it up more than 3 times a week. They're very unhappy if they don't get it on the day that they miss out on. And we've got a lot of feedback about the fact that the business is the news and the business news actually is very accessible and very relevant. So they're really happy with the relevance, really quite happy with less politics. And they also like the fact that there's lots of kind of unique insights and stories in our paper which you don't get in the main ones. So it keeps them very happy for the commute home from work. We speak to the young urban audience, so our research says that 60% of our audience is youth, 90% of them are LSM 8 and above, which basically means they're affluent, they have money in their pockets. So we have a very, very targeted distribution, and that's what we do. Nobody does that exactly, so we don't really see that there's any competition, although there are similar products around and they can learn things from us and we can learn things from them. But we're focused on delivering the youth. Hiring staff is always tough, you know, and especially if you're a startup, you have to go from zero to full working company in no time at all. So naturally you make some mistakes. But we're looking for basically for young, energetic people, and especially in the newspaper industry, it's a bit sort of dusty and old-fashioned. And we had some experiences of looking to hire people with 25, 30 years of their CV. But what we found is they didn't really have 30 years of experience. They had 1 year, 30 times over. So they weren't flexible, they weren't agile, they weren't able to produce the kind of paper that we're producing. So our managing editor is 30 years old, and he's actually old for his team. So we've got a young, dynamic bunch of journalists which really produce a great product. And they're really passionate, really, really passionate about it. I mean, the team will go to war. So people with youth, energy, passion, and the ability to tell a story. Most newspapers don't actually make their money out of the cover price. They make their money out of advertising. If you're a new newspaper in the market and you want to build a decent number of readers and build your circulation, it could take 1, 2, 3, 4, 10 years before you get enough people wanting to buy your newspaper that an advertiser wants to buy advertising off you. So reducing the cover price means that we can get to those high numbers. As I say, we have 30,000 copies a day, probably 300,000 readers a day, and advertisers are interested in that once that's a proven number. So we make our money through advertising revenues. And there's an expected delay between hitting the streets and people advertising. So the shareholders of the company have invested money to make sure we have working capital to do that. Well, I think this is a fascinating initiative. It's so enjoyable, it's very disruptive, it's very innovative. I was speaking to somebody who's quite senior in the industry just this morning, and he said, you are turning this place on its head. And that's quite good fun, obviously. So I like doing that. I like being able to sit with my team, who are very energetic and capable people, and say, we can do it better than everybody else, how will we do it? Having said that, of course, you mentioned I have a strategic investment partner and they need to see return on investment, so we need to make sure that we make money as well.
The story of African media. Fascinating story there from Paul Marshall. Let's move on to the currencies. Not much development on some of the majors, at least as far as Nigeria's Naira is concerned. At 160.9, that's the strongest level it's been in about 3 months. The last time it was here was around early May, first week, give or take. Kenyan shilling barely moving against the American dollar as well. Liquidity, of course, providing quite a bit of support. The interesting story, not on this chart, the UGX did post in quite a bit of a recovery last week, especially after the anti-gay law was thrown out by the Constitutional Court. It was up 0.3% on Friday, and it's been relatively stable in Monday trading. Right, here's a preview of what we're working on and what you can expect in the show tomorrow. We'll still be keeping an eye on developments at the US-Africa Leaders Summit in Washington. All those billions of dollars of trade on the line. What exactly will come out? Well, we'll find out. We will also be looking at the effects of the adoption of the US dollar on the Zimbabwean economy. Is it a positive thing? Is it a negative thing? Or is it perhaps a mix of both? All that and more in the pipeline. It will be coming your way tomorrow. But that's it for this edition of Global Business. To send your feedback on this program to Global Business Africa at cctv.com. You can also check us out on Facebook, on Twitter, wherever you are, so are we. Thank you for watching. I'm